Insurance coverage is the part of the policy that says what the insurer may pay for when a covered event happens. It is not the same as simply having insurance. A person can own a policy and still discover that a specific loss is not covered. The real question is not, am I insured? It is, insured for what, under what conditions, and up to what limit? Coverage begins with the covered risk. In car insurance, that might include collision, liability, theft, or injury depending on the policy. In home insurance, it might include fire, wind, theft, liability, or water damage under certain conditions. In health insurance, it might include doctor visits, hospital care, prescriptions, tests, or preventive care. Each policy defines its own promise. A coverage limit is the maximum amount the insurer will pay for a covered loss. If a liability limit is $100,000 and a covered claim costs $150,000, the extra amount may remain a problem for the policyholder. Limits can apply per claim, per year, per item, or per category. The limit is the ceiling of the promise. Deductibles affect coverage too. A deductible is the amount the policyholder pays before insurance begins paying on a covered claim. If a covered repair costs $3,000 and the deductible is $1,000, the insurer may pay $2,000. The loss is covered, but not from the first dollar. That detail surprises people who expect insurance to pay everything. Exclusions are just as important as covered items. An exclusion says what the policy does not cover. A home policy may cover sudden water damage but exclude gradual leakage. A health plan may cover many treatments but exclude certain elective procedures. A travel policy may cover trip interruption but exclude known events. Coverage is shaped by both promises and exclusions. Conditions explain what must happen for coverage to apply. A policy may require timely reporting, reasonable care, proof of loss, medical necessity, prior authorization, or cooperation during investigation. Missing a condition can create claim trouble even when the basic loss seems covered. Insurance is not only about what happened, it is also about how the claim is handled. Endorsements and riders can add, remove, or change coverage. A homeowner may add coverage for expensive jewelry. A business may add cyber coverage. A renter may add protection for special equipment. These add-ons matter because standard policies are built for common risks, not every personal situation. A small endorsement can be the difference between covered and uncovered. Coverage also depends on who is insured. A policy may cover the named insured, family members, employees, passengers, tenants, or guests in different ways. In liability claims, the identity of the person causing the damage can matter. In health coverage, dependents and network providers matter. Reading only the coverage type without checking who qualifies can lead to false confidence. Location can change coverage. A car policy may work differently across borders. A health plan may cover in-network doctors more generously than out-of-network care. A home policy may cover belongings at home but limit coverage for items away from the property. The place where the loss happens can affect both eligibility and payment. Timing matters as well. Coverage usually starts on an effective date and may end on an expiration or cancellation date. A loss before the start date is not covered by that policy. A loss after cancellation may be rejected. Renewal dates, waiting periods, and late premium payments can all affect whether coverage is active when the problem occurs. A claim example makes this clearer. Suppose a kitchen pipe suddenly bursts and damages flooring. The policy covers sudden water damage, the homeowner reports it quickly, documents the damage, and the loss exceeds the deductible. That claim may fit the coverage. If the damage came from a slow leak ignored for months, an exclusion for gradual damage may change the outcome. Coverage can also be actual cash value or replacement cost. Actual cash value often accounts for depreciation. Replacement cost focuses on the cost to replace with a similar new item, subject to policy terms. A stolen 5-year-old laptop may produce very different payouts depending on which coverage applies. The policy wording decides the math. Liability coverage works differently from property coverage. Property coverage protects your own stuff or structure. Liability coverage protects against claims that you caused injury or damage to someone else. If a guest slips on unsafe stairs, liability coverage may matter. If your own couch burns in a fire, property coverage matters. Different coverage parts answer different problems. Underinsurance happens when coverage exists but is too small. A homeowner may have fire coverage, but the limit may not be enough to rebuild after construction costs rise. A driver may have liability coverage, but not enough for a serious crash claim. Being covered is not the same as being covered enough. Limits should match realistic exposure. Overlapping coverage can create confusion too. A person may have health insurance, travel insurance, and credit card protection for one trip. Which one pays first may depend on coordination rules. More policies do not always mean faster payment. It may mean more paperwork unless the responsibilities are clear. The declarations page gives a quick summary, but the full policy gives the details. The declarations page may show names, dates, limits, deductibles, and covered property. The policy form explains definitions, exclusions, duties, and claim rules. A smart review uses both. The summary tells you where to look. The wording tells you what it means. To check coverage before trouble happens, match the policy to realistic scenarios. What if the roof leaks? What if a child breaks a neighbor's window? What if surgery is needed? What if luggage is stolen? Scenario testing turns a thick policy into practical questions. It also reveals gaps while there is still time to adjust. Coverage should also be checked after life changes. Buying expensive equipment, moving homes, starting a business from home, adding a driver, getting married, or having a child can all change risk. A policy that fit last year may not fit today. Insurance gaps often appear because life changed quietly while the policy stayed the same. Another practical issue is proof. Even when a loss is covered, the insurer may need receipts, photos, medical records, police reports, estimates, or repair invoices. Coverage answers whether the policy may pay. Documentation helps prove what happened and how much it cost. A covered claim can still become slow if the evidence is weak. Coverage can be broad in one area and narrow in another. A strong home policy may still limit jewelry. A health plan may cover hospital care but restrict certain drugs. A business policy may cover property damage but not professional mistakes. The word covered should always be followed by the next question: covered how, and for how much? Insurance coverage is the actual promise inside the policy. It is defined by covered risks, limits, deductibles, exclusions, conditions, people, places, and dates. The safest habit is to read coverage before a claim, not during panic. When you know what the policy promises and what it does not, insurance becomes less mysterious and much easier to use wisely.